Yes, good evening, sir. Thank you very much, sir.
You're welcome.
Okay, sir, a quick one. I want to get your take on this.
Yes, please.
The pilot questions that
Yeah.
was released alongside the study text,
Okay.
the new study text, there were these pilot questions that came along with them.
Okay.
So I don't know. I'm thinking that we might need to also give attention to those pilot questions. Reason being that you know, a lot of money was spent in the production of these stuffs, and they might not really want to reinvent the wheel, kind of. You know, they might just kind of recruit some of those questions and lift them from there. I'm just thinking that those questions should give us a clue. And I don't know, maybe your take on it would be nice. Thank you, sir.
You're welcome. Fantastic. Good thoughts. Samuel, you were trying to say something. Was your hand up so that I can take the two questions? Are you trying to say something, Samuel?
No, not at all.
Okay. Thank you, Kachi, for bringing that to the fore. So it's the same format, the same 7 questions. So what I think we should do based on your suggestion is that once we are done with all the chapters, we can do the pilot questions and share thoughts on those 7 questions. Maybe we are done with the lectures and the past questions for all the chapters up to chapter 16. We cannot take the pilot and dissect all the 7 questions and share some thoughts on how to approach them. And if we can use it to also revise, like you provided very good suggestion, and I think it's true. They may recalibrate the questions and present them back to us in another way. So it's a good one. I don't know if it resonates with us after our classes and the past question and answer. We can use the pilot, 7 of them, to do some kind of practice. And I don't know. Kachi, I appreciate Kachi's suggestion. What do we think? Let's converse on that. Is that okay with us? Anybody agree with
yes, it's okay.
looking at it? Okay, that's fine. All right, I see Isabella's emoji. All right, that's good. So we'll look at the 7 pilot questions and answers. Share some thoughts after the class. After we are through with the 16 chapters, we can use it. I'm also suggesting maybe some intensive classes, question and answer classes based on about 10 diets. If we have time anyway, we would communicate appropriately based on that. Okay, thank you, Kachi, for that good suggestion. All right, so let's look at May 2025 and how it tests which questions tested chapter 6. We'll start with May 2025, question 2. Question 2 tested chapter 6. And the question reads, Awaye Washiri. Okay. I think I understand that Yoruba. We came to live to play. Yoruba people on the call. All right. Awaye Washiri. Okay. Me, I didn't come to play, Sha. All right. Very funny. Awaye Washiri Bakri Limited.
Awaye Washiri, not Awaye Washiri.
Oh, okay. Awaye Washiri. Okay. We came to live to do well. Something like that. Yeah, okay. Thank you for the correction. When I saw Awaye Washiri, I was like, which one is Shiri? Thanks for that. Okay, so Awaye Washiri Bakery Limited has been in business for over 10 years. It has an internal control system in place, but it is not implemented as designed. Wow. The control lapses identified are indications that the company will find it difficult to cope with a rapid changing business environment. Despite computerization of its operations, manual processing of transactions are still taking place. The employees have gate passes and tags that they should wear before entering the company premises. However, experience has shown that some of the tags are misplaced or stolen. Sorry, let me zoom it a bit. Let me zoom out. Okay. However, experience has shown that some of the tags are misplaced or stolen and used by unauthorized people to access the premises. Some of the directors are not committed and hardly do they meet the expected yearly number of times for which they are required to attend board of directors meetings. Added to this, many of them bought goods from the company on credit and in most cases did not pay back. A background check conducted on 2 of the directors revealed that they engaged in unethical business practices which had a negative impact on the image of the company and its market share. A partner of the company's auditors is the younger brother of the company's chairman. The auditors hardly issue any report on weakness identified in the internal control system of the company, despite the indications of inclusion of material misstatements in the financial statements. The audit firm does not have capable staff. The managing director is very powerful to the extent that he can approve any amount of money or transaction. The supply of flour and other stock items are not subjected to competitive bidding, but by those nominated by the MD, and this sometimes led to over-invoicing. Inventory count rarely takes place in the company, while impaired tangible assets are not identified. The software available for processing transactions has not been updated since acquisition and has been assessed unsuitably to support good financial reporting. Most of the staff of the organization are poorly trained, and the few experienced ones are not allowed to go on leave for fear of the inability of inexperienced staff to perform when they are on vacation. Over-reliance on some staff and carefree attitude of the directors in performing their functions have made fraud to be perpetrated unnoticed. The company's revenue has dwindled over time and led to the inability to meet financial obligations as upon due. Some creditors have threatened not to supply goods except all outstanding debts owed them are paid. There are receivables in the company's books of account that cannot be substantiated. Hence, they are as good as bad debts, waiting to be written off. Payment of salary and allowances of staff has become a problem, and the relevant tax authority has threatened to prevent the company from operations if all statutory taxes are not paid. Due to the precarious financial situation of the company, a friend of the chairman who has been warning him about the business and other risks in the company has suggested the need to look for a good investor that will inject fresh capital and introduce informed directors who are capable of turning the company around. He has also suggested the need to engage a new audit firm that will adopt a modern audit approach, which is risk-based, that would lead to transparency and confidence in the financial reporting of the company. The chairman of the company learned that you work for one of the reputable audit firms in the country and has invited you for a discussion to help him understand the position of his friend on the need to allow new investors into the company required. Evaluate the main audit risks that prospective auditors are expected to assess and manage effectively in the above situation if engaged. 6 marks. B. Discuss business risk and identify how it can be linked to the financial statements of Awayewa Shiriri in the above scenario. 5 marks. State the financial statement risks that would affect audit risks in the above scenario. 9 marks. Wow. 20 marks. Incredible. Okay, long read. Well, it's almost time for break, but then please permit us to finish this question, then we'll go on break, please. All right, so I think the question is a classic risk-based audit scenario question. It tests our ability to read a case study, long case study actually, identify the key issues and link them directly to audit and business risks. So the solution, I think, the provided solution gives us, I think particularly for the A part, is a bit, I think, generic or theoretical from the solution, while actually it defines audit risk model, inherent control and detection risk, which we'll be looking at in chapter 7 on audit planning. It doesn't fully apply this concept to the specific facts of the case, which is what the marking key values. So I think those are my thoughts on the A part. But the B and C part is better because it links specific business risks and financial statement risks to the scenario. Okay, so it's good, but the A part was a bit, when I was going through it, was not too linked to the scenario, but then the B and the C part was linked. So let's look at the examiner's report. Examiner's report. Okay. So the examiner's report confirms my observation, I think, because it stated that candidates lack the understanding of how to evaluate and link the various risks to the audit process. Okay. And then I think the marking guide also shows. Okay, so this the marking guide. The marking guide also shows that marks are allocated for stating the risk and providing an explanation or example, particularly those linked to the scenario. Yeah. So linking it to the scenario. Okay. So for the B part, then the main audit risk for the A part. Okay. So for the B and the C part confirms, but the A part is not too clear. So I was not comfortable with the A part, but it's fine. If ICAN has provided this solution, then we'll need to align properly. Okay. But if you link it to the scenario, I don't think you'll be penalized. All right, so don't forget our approach. It's generally very important in your practice. As you look at each chapter, you need to practice around understanding what to write. What do I write and how do I write it? This is very important. I'm trying to reiterate that over and over again, because when you practice, you should be able to know what do I write when a question is presented like this and how do I write it. It's key. It's very important to take note of that, what to write. So with a case like this, especially the part A part, speaking to audit risk. So we are asked to evaluate the main audit risk that prospective auditors are expected to access and manage effectively in the above situation. If engaged, we have 6 marks. So for the part A, don't just define the audit risk model. We'll look at that in chapter 7, speaking to planning. Start by stating the 3 components. So inherent, control, detection, then apply, immediately apply them to the case scenario. So for example, let's look at, okay, good. So for example, the inherent risk, you would mention the inherent risk associated with the powerful MD or the nature of related party transactions, speaking to directors buying on credit. So that inherent risk could be aligned with that example. Then for control risk, you directly point to the numerous control lapses mentioned in the case. So for example, lack of segregation of duties, obsolete software, missing gate passes. So those are control risks. So that's the A part. It's good to take note of that. Then for the B part, okay, you should first define business risk as the risk that an event or action could affect the company's ability to achieve its objective or stay in business. So after that definition, then for each risk you identify from the scenario. So for example, from the scenario we've read, poor liquidity is a risk, reputational damage. So you must explicitly explain its link to the financial statements. So for instance, poor liquidity, like we spoke to, creates a going concern risk, which affects the fundamental basis of preparing the financial statements in the first place. It's very important. So take note of that for the B part. Then for the C part, financial statement risk. This part requires you to be very specific. So you need to identify risks that could lead to material misstatements in specific financial statement balances or disclosures. You should link each risk to a specific assertion. So for example, valuation, existence, completeness, especially of assets. So I think the solution provides good examples like the risk of overstating revenue, which is valuation, risk of overstating receivables, which is existence and also valuation. It's very important to take note of that. So the C part, go through the examples or the solution. It's a good roadmap, and the right in place align properly with some of these thoughts. So generally, you need to read the scenario thoroughly. It's a long read, So take note with your pen, underline or highlight every single risk factor mentioned as you are reading. So whether it is related to internal control, related to governance or financial issue, please read the scenario thoroughly. This is your source material. Another strategy is you need to use a structured approach. For risk questions like this, a simple table or a bulleted list. I prefer a bulleted list anyway, but if you provide a table with clear headings, it works best. So for example, you're stating the risk, which is briefly state the risk on the scenario, then the implication. The implication is explaining why it's a risk to the audit. So for example, high risk of material misstatement, then the audit response. So those three issues or three headers, the risk, the implication, then the audit response will suffice. So briefly state the auditor or what the auditor will do to address the risk. So the risk, the implication, then what you will do to address the risk. Then don't just define. The most common mistake in providing study text definitions without applying them is a general mistakes candidates make. The marks you earn is actually for application. So the marking guide confirms this with marks for explanation of risks and linkage to the financial statements. So try to be specific. Instead of saying poor controls, you could say things like the risk of fraud is high due to lack of segregation of duties, something like that. As the MD can approve any transaction, you see you've linked it to the scenario. So try to be specific. Then please try to manage your time for a 20-mark question. Approximately allocate 1.8 minutes per mark. So spend a few minutes reading the question and identifying all the risks. Then try to write sporadically and very fast. So if you look at the marking key, let's look at the marking key, okay? So if you look at the marking key, it allocates 1.5 marks for the part A for mentioning the 3 types of audit risk and 1.5 marks for explaining them. You see that the remaining 3 marks for the examples of detection risks. It suggests that while defining the model is important, the real marks are in application, even for the A part. Application. Take note of that. So you must provide specific examples on how you lower detection risk, such as increasing substantive procedures, using data analytics, and expanding the sample size, something like that. Then for the B part, you see the mark gives 2 marks, or the marking guide gives 2 marks for mentioning and explaining 2 business risks, and 3 marks for linkage to the financial statements. It emphasizes the crucial link. So for example, mentioning poor liquidity will give you 1 mark. Then explaining that it creates a going concern risk that must be disclosed in the financial statement is another 1 mark, which will earn you the full marks for that point. So take note of that. Then for the C part, okay, the marking guide allocates half mark for mentioning each of the 6 points and 1 mark for explaining them. This means that a mere list of risk is not enough for this part. You must state the risks. So for example, overstatement of receivables. Then explain why it's a risk in the context of the scenario. So for example, receivables that cannot be substantiated, as good as bad debts waiting to be written off, and all that are areas you could speak clearly to. Okay, so that's it on our Iwashiriri question we just look at. So any question? I've taken 10 minutes of our time so that I can run on break. I had to do that. So any question on this?